Ooh, buddy. All right. Hello, hello, hello. It's your cousin Dustin here. Here we go. So, guys, look at the heat map. A lot of red. Apple's up 0.68%. Guys, it's Sunday night. Sunday at 9:29 p.m. 5/17/26. May 17th, 2026. Here we go. Sunday markets are moving. Let's see what's happening in the markets today, and then we'll see what's going to happen in the markets this week. Maybe, potentially. We'll see what we can figure out. So, Nvidia is down 4.42%. Apple up 0.68%. Microsoft up 3.05%. Tesla down 4.75%. Exxon up 3.36%. Let's get into some of these. Look at AMD. AMD's been moving. AMD's been moving. We're going to look at some of them, but first we're going to go do our lists. We're going to do our lists. We're going to look at cryptos. We're going to look at everything. Okay. Like and subscribe, guys. Sean Strickland's middleweight champion. Bitcoin's at 76,000. Let's go. The Dow Jones is sitting at 49,526.17. It's up down 1.07% today. The S&P 500 is at 7,408.5, down 1.24%. The Nasdaq is at 410.08, down 1.54%. The Qs are at 708.93, $708.93. They're down 1.51%. Gold is at $4,497.80. It is down 1.41%. Silver is at $74.35. It is down 4.13%. Crude oil is at $104.32, $104.32, up 3.27%. Bitcoin's at $76,876.29. It is down 0.74%. The VIX is at 18.43. It's up 6.78%. The VIX. The VIX. Let's look at cryptos, guys. Let's keep it moving. Okay. On trending, here we go. The top 5 trending cryptos on CoinMarketCap here. Hyperfluid at $46.06 in the last hour. It's down 0.12%. In the last 24 hours, it's up 10.87%. Open Eden is number 2. It is at around 5 cents, $0.05039. So it's up 1.85% in the last hour. The last 24 hours, it is up 29.82%. Zcash is at $528.65. 68 cents. Last hour, it's down 0.62%. Last 24 hours, it is up 5.46%. Never heard of any of these. Maybe Hyperliquid I've heard of. Zcash, I don't know. This is a bunch of nonsense, but it's fun. That's what we look at the cryptos for, you know. NonkyC.io exchange is at $7.28. It's up 0.42% in the last hour. The last 24 hours, it's down 2.46%. Blockstreet is at 0.6032. So 0.6034 now. It's moving right now. It's a little over 60 cents. In the last hour, it's up 2.24%. In the last 24 hours, it's up 38.17%. So that's fun. Blockstreet and Open Eden are up considerably. Blockstreet's up 38.15% in the last 24 hours. And then Open Eden is up 27.53% in the last 24 hours. Hyperliquid's also up 10.79%. So let's scroll down. Let's scroll it down. Because I bet there's some that are... Look at that. Yeah. Yeah, I bet there's some of them that are moving in crazy ways. You got this SpaceX. I guess this is going to be a freaking altcoin of some sort here. Let's do this. Okay. Alright. I don't know what happened. It didn't work. Something. Okay. Okay. We're doing this live. Watch me fuck this whole thing up. I don't know what I'm doing. What has happened? Go away. What the hell? Alright, here we go. CMC AI summary. This is a CoinMarketCap AI summary about this, whatever we're looking at here. I mean, it's up a lot. It's like over 1,000% or over 100%. I really don't know. Something crazy is happening here. SpaceX is a meme token deployed on base that borrows the well-known name but offers no clear origin story or project vision, and it doesn't appear to be affiliated with the real SpaceX. Its public footprint is essentially non-existent. No verified tokenomics listings, audits, or active social channels, so the token's characteristics are anonymous. Likely low liquidity and high risk. There's no real community or roadmap to speak of. So treat it as a speculative and very cautious unless you can independently verify liquidity and contract deals. So this is a fake scam shit. That's not good. Look at that. Wow. Interesting. That's how they get you. The mid-range game, like a 2008, 2009 Rip Hamilton. Let's keep going. Well, now I've all the way screwed up. I don't know what I'm doing. There we go. So we got coin or SpaceX over here with the fake shit. All right. Fabric Protocol up 11.17% in the last 24 hours, sitting at a little over 2 cents, 0.02185 cents. Or dollars, rather. You know what I'm saying. You know what I'm saying, man. Space Coin up 15.92%. So we're seeing people just see shit that has to do with space and they're like, look at that, space. The SpaceX IPO is coming up. People are tripping on that. Let's go back to the heat map. We've seen enough of the nonsense. Let's look at some of the stocks that are moving. Lam Research Corporation is down 4.82%. We looked at that one a few weeks ago. Look, this whole sector is down except for this Targa Resources, TRGP. They're actually up 1.69%. But some of those other stocks are down. This utility sector. Consumer durables. Ford's down 7.46%. Look at that. Fascinating stuff. GLW, Corning Incorporated. Oh, shoot. My notes, guys. My notes. Give me 1 second. I'm going to go get my notes. So we got a lot of stocks that are going to have earnings this week that are going to be pretty important. Nvidia. Big Nvidia. Probably the most important damn stock in the stock market. Let's look at Nvidia's current situation. Alright, so Nvidia is currently sitting at $224.41. In the last 5 days, they're up 3.1%. The past month, they're up 11.72%. In the past 6 months, they are up 20.75%. Year to date, they're up 20.82%. The past year, they're up 66.2%. The last 5 years, they're up 1,403.14%. On a maximum chart, they're up 563,200. 563,200%. My goodness. They pay a dividend of 0.02%. That's 0.01 cents a quarter. A PE ratio of 46. A 52-week high of $236.54. 52-week low of $129.17. So they're up near their 52-week high. They have an EPS of $4.90 with 24.3 billion shares outstanding and 42,000 employees with a market cap of $5.46 trillion. Nvidia, baby. Alright. Let's read an article on Nvidia here, dog. Nvidia earnings ahead. Diminishing revenue surprises face high expectations. This is by Florian Muller. Summary. Nvidia remains a core holding with robust revenue and earnings quality, but I refrain from further accumulation ahead of earnings. Hyperscaler CapEx. A strong leading indicator for Nvidia revenue shows continued growth, but with recent QoQ slowdowns from Microsoft and Meta, revenue surprises are shrinking as analysts' expectations rise, suggesting Nvidia may only meet consensus this quarter rather than beat it to the extent investors are used to. Ooh. My DCF spot estimates suggest further accumulation territory at least under $200. I maintain my overweight position relative to broad indexes, which I am not reducing either. Okay, buddy. Alright. Nvidia matters to all of us. Being the world's most valuable company by its market capitalization of $5.5 trillion, Nvidia's earnings this Wednesday after market closing are obviously highly anticipated. The stock accounts for roughly 8 to 9% of S&P 500 ETFs, about 6% of MSCI World ETFs, around 4 to 5% of MSCI All World ETFs, and approximately 2 to 3% of my very own portfolio. That's this guy talking. With that, the average passive investor's exposure to this single company is substantial. Since I have been covering Nvidia here on Seeking Alpha, you have always seen me cautious regarding entry points and exposure, primarily highlighting quantitative risks yet never bearish on the company, especially back in February. I highlighted Nvidia's healthy sideways movement over more than half a year, leading to improved entry points and a far more favorable share price setup, even considering an expansion of the position. Since then, Nvidia rallied by an incredible 22%. Let me state in advance that all my cautious optimism does not change today. I am sitting on roughly plus 90 to 100% gains on my position, neither planning to exit nor intending to buy more ahead of earnings. Read on to find out why. Got a little chart there. First, hyperscalers slowing down. As always, we have the convenient situation that with hyperscalers reporting a month prior to Nvidia, an incredibly robust leading indicator is known in advance, namely hyperscaler CapEx. Google, Microsoft, Meta, and Amazon's quarterly CapEx is highly correlated with Nvidia's 1-month offset revenue, 0.97 coefficient. Extrapolating this trend has proven pretty reliable in forecasting that revenue consensus should easily be beaten over the past few quarters. With that, let us look at this time's CapEx setup prior to Nvidia's earnings print. In their respective first calendar quarters of 2026, Google's $36 billion CapEx number was by far the leading one in terms of growth, more than doubling year over year and up 28% quarter over quarter. However, Microsoft's and Meta's CapEx development during calendar 1 was remarkable. Microsoft stayed almost flat Q over Q at $31 billion, with $30 billion a quarter prior, while Meta's even declined quarter over quarter to $19 billion from $21 billion a quarter earlier. I mean, these companies can't just blow all this money forever. You gotta have some kind of a point of return at some point, and I don't know how any of them are making money really off of AI. It seems like it kind of doesn't work like that. I don't know. Let me know in the comments below, guys. What do you guys think about this whole AI situation? You think it's like helpful for these companies at the end of the day? I don't think it really helps you if you want to make money off of it itself. Like, it'll help you make money in other ways, I guess, but not that way. Because, like, if somebody charged for, like, I'll never probably pay for a special AI thing. If I can just do, like, look up Google stuff, that's all I need, really. I don't know. Doesn't make any sense to me, I guess. Now extrapolating 3 years correlate. This is back to the article, guys. Sorry about the tangent. Now extrapolating 3 years of correlation trends between hyperscaler CapEx and Nvidia revenue with these data points, the math would suggest a revenue print of roughly $78 to $80 billion in Q1. That is in line with current analyst consensus. The exact same methodology had rightfully forecasted the far upper end of the range over the past few quarters. This time appears different. Analysts' expectations have gradually risen to levels harder to beat. And there's a little graphic there. Their estimated 79.17 billion. The year-over-year growth is 79.67%. On the low end, 77.9 billion. On the high end, 85.51 billion. The same is visible when looking at the long-term revenue surprise trends below. The margin of surprises is shrinking overall, as analysts get used to beats and investors continue to up their expectations. They had that big beat in 2024. What do you guys think? You think Nvidia is going to smash these earnings and surprise us all? Or do you think it's going to be kind of lackluster? Quality concerns invalidated. Back to the article here. Nvidia's Q4 earnings have again largely removed doubts about revenue and earnings quality. Free cash flow margin again solidified between an incredibly strong 40% and 50%. In part, this was again thanks to reduced days sales outstanding from customers. Remember, some analysts have often criticized the ever-increasing number of receivables. However, these must be analyzed against the backdrop of growing sales, measured, for example, in DSO, which is well within normal ranges. The last quarter represented a welcome course correction in that regard, as DSO had indeed increased previously, while FCF margin had decreased. Sub $200 easily to be seen again. My WACC base assumption for Nvidia decreased from 13.5% to 13% on the back of a statistically declining beta factor, which, however, still sits firmly above 2 on a raw basis. I guess this is like chart analysis math. Honestly, this is kind of above my pay grade, guys. Maybe I'll learn about this crap someday, but not right now. My terminal growth rate came down from 5% to 4.5% on a reduced return on assets. No, actually, I get that. I'm tripping. Yeah, sorry. Hinting at gradually diminishing marginal return on newly invested capital. Yeah, I know what that means. Sorry. Coming to the cash flow part of the equation, for which I stem from the whole range of Wall Street EPS estimates and apply observed FCF conversion. We saw another sharp uptick in revisions after Q4 earnings, as these are now reflected in all my DCF scenarios. They act as notable value enhancers. Net cash has increased as well. As a result, my DCF spot estimate has notably increased since February. Most importantly, however, I always want to account for a broad spectrum of alternative input parameters. Nvidia's current share price of around $224 or $225 falls within one of my thinkable ranges, as is visible in the sensitivity and scenario chart below. Still, I refrain from further accumulation ahead of earnings at this point, finding any share price closer to the inner range of my sensitivity ranges, darker green, under $200 more attractive. Well, yeah, of course you'd rather get it under 200 than over. But no, I have to agree. I feel like Nvidia is very likely to go back under $200, and really, that's kind of my buy spot as well. If it's under $200, it'll be back over $200 again someday. I don't know. That's kind of how I really literally think about it. Nvidia is going to go up, down, and all around. Sometimes it'll go sideways for a while. But you've seen its chart. It's volatile. Takeaway. Ahead of this week's earnings, Nvidia stock has had a remarkable run-up following its healthy, more than half-year sideways movement. Hyperscaler CapEx has proven to be a robust leading indicator for Nvidia revenues, reported 1 month later. Hyperscaler CapEx growth is still strong, but at least quarter over quarter we saw some slowdown from Microsoft and Meta during calendar Q1. Extrapolating historical correlations forecasted Nvidia revenue could essentially meet consensus expectations this time. Following a trend of declining revenue surprises amid ever-increasing expectations, revenue and earnings quality remain strong, as evidenced by cash conversion. I remain invested ahead of earnings, yet with my underweight position as opposed to broad indices and ETFs. This guy's invested in Nvidia. Full disclosure. Okay. Pretty cool. I say we look at some more stuff. We look at some more stuff. There we go. So on Wednesday at 5 p.m., they're going to do earnings for Q1. Estimated $1.78 for EPS and $79.23 billion in revenue. Think they hit it or you think they miss it? What do you guys think? Let's see when the last time they missed was, if it's on here. Nope. They haven't missed in a while. They haven't missed in a while. At a glance, consensus EPS $1.77 on $78.8 billion of revenue. For Q1 fiscal 2027, analysts expect an adjusted EPS of $1.77 and revenue approximately $78.8 billion, which would represent a nearly 80% year-over-year increase. Shoo doggy. My goodness. Nvidia previously guided for Q1 revenue of $78 billion. That's plus 2%, and has recently signaled visibility into over $1 trillion of demand for Blackwell and Rubin systems through 2027. Supply constraints and manufacturing shifts. Production remains limited by shortages in HBM and advanced packaging, even as the company diversifies its manufacturing footprint and secures 60% of Taiwan Semiconductor's expanded capacity. Jeez. I was just talking about Taiwan with my mommy earlier. That's fun. Data center revenue driven by AI demand. The data center segment is projected to reach $73.1 billion this quarter, fueled by relentless demand from hyperscalers like Microsoft and Meta for AI infrastructure. Blackwell backlog extends through 2027. Blackwell-based systems are reportedly sold out through mid-2026 with a massive order backlog providing strong revenue visibility well into fiscal 2027. Ooh. Margins stabilize amid record spend. Non-GAAP gross margins are expected to remain high at approximately 75%, despite rising capital expenditures from major tech clients that now approach $725 billion for the year. Nvidia. All these ads, man. AMD's down 5.69%. I guess that would have been Friday. Intel is down 6.18%. Walmart's going to have earnings coming up this week as well. Walmart. Let's look at Walmart. Okay. Walmart sitting at $132.05. Over the past 5 days, it's up 2.64%. Over the past month, they're up 3.1%. Over the past 6 months, they're up 27.68%. Year to date, they're up 17.99%. On a 1-year chart, they're up 33.97%. On a 5-year chart, they're up 178.2%. On a maximum chart going back to May 16th, 1986, they're up 14,837.5%. That's Walmart. So they pay a dividend of 0.75%. That's 25 cents a quarter. They got a PE ratio of 48.17. 52-week high of $134.69. A 52-week low of $93.43. They got a $1.05 trillion market cap. They got 7.97 billion shares outstanding. A $2.73 EPS. They also got about 2 million employees. Walmart will report earnings on Thursday, May 21st at 8 a.m. Interesting. Yeah, get back up there. Analyst expectations for EPS and revenue. For Q1 2027, analysts project an average EPS of 0.65 to 0.66 cents, or $66. 65 cents or 60.66 cents. Jesus Christ. Of approximately $174.65 $174.65 billion, which is notably higher than the company's own guidance range. Ooh. High-income customer market share gains. Walmart continues to gain significant market share among households earning over $100,000 annually as inflation drives more affluent consumers to seek value. Let's look at this little AI question here. How is the integration of Vizio expected to impact Walmart's advertising revenue and consumer data strategy in the coming year? The integration of Vizio into Walmart is a cornerstone of the company's 2026 fiscal strategy, specifically designed to scale its... Come on. Go lay down. Specifically designed to scale its high-margin advertising business and enhance its first-party data ecosystem. Impact on advertising revenue. Walmart's global advertising business reached nearly $6.4 billion in fiscal year 2026, representing a 46% year-over-year increase. CTV growth driver. In the fourth quarter of fiscal 2026, global ad revenue grew 37%, including Vizio contributions. Vizio-specific ad sales have been triple-digit growth, significant boosting the overall scale of Walmart Connect. Huh. Y'all didn't even know that, bro. Y'all didn't even know Walmart did that. Non-endemic expansion. The acquisition allows Walmart to attract non-endemic advertisers, brands that do not sell physical products at Walmart, such as automotive, financial services, and insurance providers who want to reach Vizio's engaged audience using Walmart's audience intelligence. Everybody's got a intelligence these days. Oh shit, what have we done? There we go. Walmart is introducing a unified login for Vizio and its private label ONN TVs requiring a Walmart account. This establishes a secure identity framework that tracks a customer's journey from a streaming ad to a physical or online purchase. You guys like that? Walmart's going to be tracking your every freaking move, and then you got to have a login for your TV. That sounds fun. Scaled reach. By controlling out the Vizio OS to its in-house ONN TV line, Walmart expects the operating system to reach 25% to 30% of all households by 2027. Measurement capabilities. Advertisers can now target audiences based on verified Walmart shopping behavior and measure the direct sales impact of campaigns shown on Vizio's devices. A significant competitive advantage in a cookieless digital environment. Whoa. Whoa, dude. That's fucking crazy. I guess I'll let the back door open. I got moss. That's crazy, dude. Walmart is Vizio's Walmart's brand, I believe. Let's check. Let's do this. What is Vizio? Vizio, right? Z. Thought that looked funny. Vizio is an American consumer electronics company best known for designing and manufacturing affordable, high-definition televisions and soundbars. Founded in 2002 and headquartered in Irvine, California, the brand gained widespread popularity by aggressively pricing its flat-panel LCD TVs to compete with established premium electronics giants. Beyond hardware, Vizio developed its own smart TV platform, SmartCast, now Viziogram, which integrates streaming applications and leverages viewer data to drive advertising and content matching revenue. In early 2024, retail giant Walmart announced an agreement to acquire Vizio, aiming to utilize the company's operating system to expand its own retail media and advertising ecosystem. Wow. Alright, guys. Like and subscribe. It's your cousin Dustin. I think that's going to be enough for today. Yeah. Like and subscribe. Thanks a lot.